Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. Last week, the information that we saw from the WASDE report was bearish in nature. As evidenced in the chart here, you'll notice that the market actually took a pretty big drop shortly after the WASDE report came out. But it was able to reverse itself and come back in, due in part mostly to short covering, and actually come back and squeeze out some of the short positions that occurred at that time. The market then moved up for a couple days, but you'll notice today that the market returned back to its normal form and looks to be returning back downward again, which is what we've been looking or anticipating with regard to the oversupply that we've seen in the markets. Downside potential target that we're looking right now is roughly in the 350 to 360 range. And now that we're in the throes of the holiday season with many traders taking time off, we're going to see a bit of light volume between now and the end of the year. We want to again refresh your memory with regards to some of the key resistance levels that we had been looking at before. We had overhead resistance in the 382 to 384 range. And then we had downside support near the 366 to 370 range. We got our first close below that range in quite some time today. And in fact, this is one of the lowest closes that we've had in this contract itself. So we'll look for continued price action to the downside with regards to corn. But for now, we're looking at reduced volume across the holiday season. And so much of what we'll be looking for is for the downward movement or the downward pressure to continue either sideways to slowly down through the end of the year. Looking over at the December corn contract, we can see much of the same with regards to the price action itself. But we want to bring to your attention a couple other items as well. The market came in here and made a pretty big low a couple months ago. It had since come back in and made a higher low here, but now the market after that WASDE report broke that previous low. So it's going to be very important if this market's to move higher to really hold this 386, 385 and 3/4 area. We're very close to breaking again after having touched it a couple days ago, but now we're looking at a critical spot where if we were to go through and break this 385, 386 area, in all likelihood, we're going to be testing a downside support somewhere near 371 or so. And so the market really is in a weaker position. After having come in and dropped, we saw a retracement, and now this retracement is working its way back down again. So in order for it to find strength, we would look for the market to break previous highs prior to breaking previous lows. If this low is broken again, we anticipate the market should come down to around 370 area. January soybeans is in quite the interesting position these days. The recent moves that we've seen over the past couple months have landed January beans in a position where we see market divergence. And what we mean by market divergence, we're looking at a pretty big low that was made several months ago, followed by a lower low. But in addition to that, we like to see how the momentum or the strength of the moves are happening. The first low that we see here had pretty big momentum drop here, and the current momentum space for the new low that it made was smaller. So when a market makes new lows on less strength, that is what we call divergence. After that divergence occurred, the market came in and made a higher low right here, and that higher low happened to come in at a Fibonacci ratio of 78.6%. It now puts it at a very critical zone or critical area for us to watch. It had been tracing our geometric figure where the market came in and touched the angle across here that comes down. And each time that it's met it the last two times, the market has reacted from it and has since dropped down. But it has also found support at our volatility-based support area right along here. So what we would be looking for in particular for this January beans contract is to see whether or not we're able to recover and break the previous highs prior to breaking this 858 and a quarter area or level. If the market's able to break the previous highs prior to making or breaching this 858 and a quarter area, we anticipate that we will see a move that goes to 940 at the very least. So Jan Beans is in a critical space here because it's really setting up for what we believe to be upward prices going into January and possibly the first or second week of February for this particular contract. Now, obviously, we would not be trading the January contract, but would translate the same information over to either the March or the November beans contract. In this chart, we have the November beans contract, and you'll notice here for this contract, that notion of divergence actually did not occur. The market made a low several months ago, but the new low was actually higher, and we have a subsequent even higher low here that is actually moving in conjunction with the actual momentum itself. So the November beans contract lends itself to even greater strength with regards to where the movement is going right now. In a similar fashion, what we'd be looking for is this this December 17 low that came in at the price level of 870. Given where prices are right now, if this contract is able to get through the 926 and a quarter or 926 half level prior to breaching this previous low of 870, we would anticipate that this market can go to 967 and three quarters and possibly even as high as 993 and a quarter with regards to its movement and price action. Now, it's going to be critical to see what occurs given where he lives right now. We had 2 or 3 days up. Today was a small inside day, more or less, with a slight loss on the day. But as we look at the movement with regards to how it's trading right now, over the next couple days, because of the reduced volume that we're seeing in the markets because of the holidays, it may not have as much meaning as much as when we see volume start to come in to give us an idea as to where it wants to go. So we'll continue to be watching this and having this in our radar to understand the nature of what's going on. You'll also notice in the stochastic, it's turning down just a bit with regards to weakness, but if the market comes in or comes back and finds a little bit of strength, it could very well open back up again and make its way into overbought, which would lend itself to first testing that 926 half number and then over to 944 and a half, which is especially important a level to watch with regards to how this contract trades. In this chart of the July week contract, we can see that the market has been resonating very well with our geometric shape with regards to its movement and price action. You'll notice first as the market has come in, the last few times that it has tested this angle here on this triangle, it has met resistance and the market has declined from there. The market has gone from hitting across the top here where we have volatility-based resistance, and then it made its way down to volatility-based support. And it really has been basing near this area or this region for quite some time. It bounced up from volatility-based support, came into our natural angle inside of our geometric shape, and today in particular we can see the market came back down and saw some good pressure to the downside, even though the volume was lighter today. So we fully anticipate that the market's perhaps looking to make a transition down to the next area of volatility-based support, which would bring it closer to the 460 range as it trades, given the level of strength of the US dollar coming in that we've seen as of late. The Fed, as you know, last week raised interest rates. The first day it did not necessarily respond, or at least the dollar did not respond with strength, but subsequently it has responded with a bit of strength and has then put some pressure back on the weak contract as well. Across the spectrum of the grain markets, we continue to have a bearish bias in general with regards to our sentiment. We're noticing that soybean has the capacity maybe for the next 6 to 8 weeks to have a little bit of upward movement. But beyond that, the markets in general still continue to be bearish with regards to where we see the current inventory levels and the demographics of where we see the economies of scale. Now, it's important to watch the technicals and allow the technicals to give us a vision or insight as to where the markets may decide to move in general. But for now, our general bias continues to be to the downside. Lastly, we'll take a look over at the live cattle contract that we've been watching, the February contract in particular. If you recall last week, we said that the 122.85 level was going to be a critical zone for this contract. A couple things were occurring near this area or near this space. Number one, we had volatility-based support coming inside of this area. Number two, we shared with you that the market had come into our geometric circle, and at our geometric circles, we often find that the market wants to find support there and turn around and reverse. On Thursday of last week, the market came in, tested that 122.85 area, and then on Friday, it gapped up, and then on Monday, it gapped up again, limit up, and then on Tuesday, continued to skyrocket and move to the upside. It also crossed our key threshold of 130.8 today, closing above that level, and that was the spot that we were looking for to give us a bit of confirmation that perhaps the low is in fact in. Now that we're back above that 130.8 number, if the market happens to make a higher low, we would be predisposed to taking some longs with the stop. But in any case, it's very exciting for us to be able to see that 122.85 level, to see how the market reacted at that spot, just as we anticipated, as we had shared with you previously in our last weekly update. We're grateful that you're able to join us with our weekly updates with regards to the markets. Christmas is a couple days away. We hope you have a great holiday and look forward to seeing you at our next session.